When everyone believes that Bitcoin is valuable, Bitcoin's returns are going to be probably unattractive at that point. But the fact that you're talking to very sophisticated, very smart, usually very successful people who control a lot of capital, the fact that they are doing this and they think that Bitcoin is like that, Bitcoiners are going to be just fine. Where we go from here, I think it's actually going to be much of the same given the last decade or so. Now, again, it's not going to appreciate at the rate that it did previously. But look, gold went up 70% last year. Everyone thought gold, doesn't work. Gold is, flat. All this seems to be working. So I do think that Bitcoin can deliver, 25 to 40% compound annual growth rate for the next decade or so. If it did that, that would be a fantastic outcome, I think, for Bitcoiners.
In the world of high-stakes investing, there is a dangerous gap that exists between expectation and reality. For years, Bitcoin was the chaos hedge, the digital gold that promised to skyrocket when the world fell apart. But as we move through 2025 and 2026, the narrative has shifted. The world hasn't just changed, it has accelerated. Today, we're breaking down a masterclass from Anthony Pompliano. We're exploring why Bitcoin's disappointing year is actually a sign of its maturity, how Wall Street has fundamentally tamed the digital beast, and why the rise of the super athlete, the AI agent, is about to redefine what it means to have a job. Let's start with the elephant in the room: Bitcoin. If you look at the headlines, 2025 felt like a letdown for many crypto maximalists. But as Pomp points out, data is a master of disguise. Before we go on, just a quick reminder: liking the video, subscribing to the channel, and commenting helps this reach more people who care about Bitcoin and macro trends. Appreciate the support.
If you look at Bitcoin in particular, there's always this difference between expectations and reality. And Bitcoin going into the year had really high expectations. And so naturally, if you don't live up to those expectations, then people are disappointed, even if, it does okay. And so if you go back and you actually started January 1st, Bitcoin was down on the year a little bit. But if you go back to November 1st, just a difference of 60 days, Bitcoin was up. It started November 1st at 69,000, right? It obviously ended up higher than that at the end of 2025. And so you always got to be careful of some of the misleading data, the difference between 60 days. But at the same time, it was down in 2025 and people thought it was going to be up a lot more. So I think that's where a lot of the disappointment comes from. If you ask me why it didn't go up, you also have to remember it did go up and then it came down. And so there's always this kind of element of, okay, well, what happened over a 12-month period? First thing is there is global stability coming back, right? Bitcoin's supposed to be a chaos hedge. Well, if there's less chaos, then people change the way they view the chaos hedge. I don't need that as much right now, right? And so I think that stability, if you look, obviously the Israel-Hamas stuff ending, I think that Ukraine-Russia is probably closer than ever to signing a peace deal. There's all these kind of components that have really come into the market. And a lot of that is because the U.S. has basically stood up and said, we are going to go back to being the world police. We're going to go enforce this stuff. We are going to go and, decrease Iran's nuclear capabilities, like all this stuff. So that ends up leading to maybe the people who are buying Bitcoin as a chaos hedge not necessarily needing it. The second thing is that Wall Street entered the game. And when Wall Street enters the game, they play a very different game than, kind of maybe the Bitcoin system was before. They introduced things like ETFs, like treasury companies, like options, etc. And so if you just look at the idea of covered call strategies, which have exploded over the last couple of months, that provides a ton of sell pressure against Bitcoin. So it is a way to kind of suppress the volatility, suppress the price of Bitcoin. Not done in a nefarious or malicious way. It's just the structure of a market. Bitcoin historically was a very free market asset. There was only kind of long only. It's the only way to play it. That has changed. And so I think that's another component. The third thing I would say is that Bitcoin is not the only girl at the party anymore. It used to be if you wanted asymmetry and you wanted something that was really volatile, you went and you found Bitcoin. But now there's a lot of stuff. Artificial intelligence, self-driving cars, robotics, Palantir, all these different things that have come out into the market where people are saying, I want something that's asymmetric. Well, there's a lot of things I can choose from. And so it fragments capital, it fragments attention, and it fragments mental energy. And I think that plays a part as well. And then lastly, I would, kind of tie a bow on all this and say, ultimately, you get paid the return for the risk you take. And Bitcoin is less risky today than it's ever been in the history of Bitcoin. A decade ago, people were talking about, is Bitcoin going to make it? 2 years ago, people were talking about, is the government going to shut it down? And many people thought, depending on who won the election of the president of the United States, was going to determine what was going to happen. Now, nobody thinks the government's going to shut it down. Nobody thinks Bitcoin's going to zero. And nobody thinks that it's going to end up not being around 20 years from now. So the lower risk means you should expect a lower return. Doesn't mean you won't get any return, just means it should be lower. And so I think that compounding annual growth rate will continue to kind of tick down over time. And, I think Bitcoin is still a great long-term asset. I still have Bitcoin in my portfolio. But last year, a little bit of disappointment maybe is a good thing. It kind of keeps people alive and on their toes. When everyone believes that Bitcoin is valuable, Bitcoin's returns are going to be probably unattractive at that point. But the fact that you're talking to very sophisticated, very smart, usually very successful people who control a lot of capital, the fact that they are doing this and they think that Bitcoin is like that, Bitcoiners are going to be just fine. Where we go from here, I think it's actually going to be much of the same given the last decade or so. Now, again, it's not going to appreciate at the rate that it did previously. But look, gold went up 70% last year. Everyone thought gold, doesn't work. Gold is, flat. All this seems to be working. So I do think that Bitcoin can deliver, 25 to 40% compound annual growth rate for the next decade or so. If it did that, that would be a fantastic outcome, I think, for Bitcoiners. But it is going to really depend on what happens in the U.S. economy, in the global economy, what happens with, geopolitics, what happens in technology, right? All these things play into it. But I'm fairly bullish on Bitcoin moving forward. And I think that Bitcoin hasn't changed. The world has changed. And so Bitcoin will continue to be something that people seek out given its kind of decentralized nature.
While Bitcoin is maturing, artificial intelligence is in its rebellious, explosive teenage years. But Pomp clarifies a key distinction. AI is the technology, but automation is the impact. Deep in labs right now, nerds are building what Pomp calls super athletes. Some are digital, AI agents designed to do your knowledge work job better, faster, and cheaper than you ever could. Others are physical, humanoid robots moving into blue-collar industries. Look at the numbers. Amazon already has 750,000 robots working alongside 1.5 million humans. That ratio is only going one way. Why? Because automation is the ultimate economic incentive. It offers an extra unit of productivity for one less unit of cost. In a capitalist system, that is an unstoppable force.
Well, if you think about artificial intelligence, what people really should think about is artificial intelligence describes the technology. Automation describes the impact of the technology. So if you are going to use artificial intelligence, superhuman intelligence, and you are going to apply it in different tasks or applications, then you are going to get efficiency via that automation. And so I continue to say that there are nerds in the labs building super athletes. You have people who are building artificial intelligence agents and models. They're going after the knowledge workers. They're trying to do your job better than you. You may not like it. I'm not even saying that it's good for society. I'm just saying that that is what they're doing. They are creating synthetic intelligence and they are applying it to all kinds of jobs. So they're building super athletes to come after your job. Can you beat the super athlete? We're going to see. Some industries might be easier than others. At the same time, there's other nerds. I love all the nerds. The nerds are amazing. But there's other nerds that are sitting in a lab somewhere, and they're trying to build super athletes using machines and hardware. And they want those people to go into the blue collar industries and go replace those jobs. And this is not new. I mean, if you go look at a Tesla factory and how they make the car, there's a ton of robotics everywhere. If you go to Amazon, Amazon has something like 1.5 million employees that are human. There's 750,000 robots that are actually working at Amazon. Eventually, that number is going to shift. And so over time, automation is the ultimate economic incentive. Because if you automate things, you make them more efficient. If you make them more efficient, you make them more productive. If you make them more productive, it means companies get more profit. They get more profit, they're more valuable. So if you go all the way back to first principles thinking, automate, automate, automate. And now we have nerds who are sitting in labs who are building super athletes to automate everything. And if you look at that, that means that you have this deflationary force hitting the economy because these super athletes, the models, agents, and robotics can do things that are more productive and at a lower cost. So when you start to get a extra unit of productivity for one less unit of cost, and then you put that on steroids, Well, that becomes pretty powerful. And then people haven't even yet started to think exponentially. And I think this is actually one of the biggest misunderstandings. If you take the person who is likely in your circle of friends that is most bullish on AI, it is likely that they're underestimating what's going to happen. What the timeline is very hard to hit. But what we know today is that a gentleman named Boris at Anthropic sat down for a side project, wrote some code, and he created something called Claude Code. Now, anyone in the world can go to Claude Code and they can write in English, plain language. I would like something that does A, B, C, and D. It should look like X, Y, and Z. It should do this. Claude Code, which is artificial intelligence, writes code for you. So now we have code that writes code. Well, guess what? As that software becomes more and more autonomous, it's going to bang out more and more code. And there becomes an exponential curve of software creation. Humanoid robots, it's cute today when they're picking up boxes. It's cute when they're assembling cars. What happens when they're assembling other humanoid robots? That's going to happen. And so you have another exponential curve. And so the world thinks in linear fashion. It thinks in static snapshots of where we are. But what you have to do is you have to be able to look at the exponential growth of these technologies and realize there is going to be autonomous software writing software code. It is going to be happening 24/7 around the world. There is going to be an explosion of software and automation in our lives. Humanoids are going to do the exact same thing. And so when you start to understand that, you then say to yourself, wait a minute, we are all underestimating what is about to happen. Now, does that happen in 1 year or 10 years? I'm not here to try to predict exactly what year is going to happen. All I know is that directionally, I can see where this is going. And when I look at the people who are critics, I think they've lost their marbles. When I look at the people who are bullish, I think that they're being kind. And I actually think that most of them are probably even more bullish. They don't want to sound crazy though. And so when you go and you just look at this thing, I don't know, man, 2 years from now, that super intelligence, what's it going to be doing? Think about 2 years ago, almost every single AI product that you're using today did not exist. In 2 years, all of the popular apps, all of the popular things, they didn't exist. I think just over 2 years ago, ChatGPT came out. So think about how much progress we made in 2 years, and think about that we did it with old technology, way less attention, way less capital, and way less people working on it. So if we have increased the technology, if we've increased the capital, the attention, and the human capital working on this, we should be able to go faster, right? And now we're augmenting it with the synthetic intelligence we already have. It's the great acceleration, baby. And so what I tell every single person, I met with a young person today, and he was asking me about, what he should be thinking about. He's 23 years old. And I said to him, you've got a choice. You've got to decide, are you going to get hurt by it, or are you going to have it help you? Because if you try to get a job in another sector, he's thinking about switching, careers, you are not going to be able to compete with this technology over the next 2 years because you are an entry-level employee. And the thing that this technology is good at is entry-level tasks today. It's going to get better. It's going to eat up the food chain. But right now, your skill set and what this machine can do are about the same. And guess what? This thing doesn't take a break. It doesn't go on vacation. It doesn't complain. It doesn't have HR violations, all that kind of stuff. And it's cheaper because it's willing to work for an amount of money that you're not willing to work for. So you are going to end up getting hurt by it if you try to go compete like that. But instead, if you flip to the other side, then you can go and harness it. And if you can harness synthetic superhuman intelligence and you can apply it to the things that you want to do in the world, now all of a sudden, you're like a king. If you go back and you think about in the 1900s, early 1900s, if you go here in New York City, one of my favorite places in New York is JP Morgan's library. And you walk into his library, you look, and for those who haven't gone, you walk in and it's this 3-4 story amazing thing. It's an incredible, one of the best libraries in the world. And think, the world's richest man had access to more information than anyone else in the world. And that information was in that library. JP Morgan, I have more information than you now. 100 years later, We took that entire library and we boiled it down into this smartphone. But not only is his information in there, all the information in the world is in it. And now I could talk to it. I could tell it what to do. I can make it go to work for me. And so when you think about that technology progress, JP Morgan would have been an animal with AI. Imagine him using all this technology to go out into the world and work for him. Well, that's what young people should think about, right? Everybody should think about, but especially young people. Don't get hurt by it. Use it to help you. Learn to harness it. Use it to empower you to be more productive. And one of the things that young people don't realize right now, you want to have job security? Be the guy who knows AI. If you want job security, if you're the one who knows AI, you're going to be safe in a lot of corporations. Because guess what? You're a boss, your boss's boss, the CEO, the executive team, they don't know this stuff. They ain't got time. They got to go home. And when they get home, their kids don't care about work. Their kids care about, hey, play with me. I want to tell you about my day, all this stuff. When you go home, you got free time. That's the greatest luxury in the world. Go learn how to use the tools, let it empower you, and then become more productive. And if you become the expert inside your company, you're going to be perfectly fine.
The takeaway from Anthony Pompliano is clear. The world is not waiting for us to catch up. Whether it's the institutionalization of Bitcoin or the exponential rise of autonomous AI, the old way of doing things is evaporating. Bitcoin is no longer a lottery ticket. It's a sophisticated, long-term asset. AI is no longer a sci-fi fantasy. It's your newest, most dangerous competitor, or your most powerful ally. The choice of which one it becomes is entirely up to you. The great acceleration is here. Are you going to get hurt by it, or are you going to use it to help you?